The question going in here is the stock's run and the valuation of the stock.
Yeah, I mean, the AI business was like up a couple percent or something like that. And though when you think about the demand that they're talking about when it comes to PCs and refresh, I mean, half their sales almost is HP, Dell, and Lenovo. So if you're talking about like laptops and PCs that need on the device, like AI, Apple doesn't have on-the-device AI. Like, they're just going through this upgrade. So what I'm saying is like, I'm not sure PCs need that. These are not high-margin products as it is. You know what I mean? They have long lead times, that sort of thing. Why wouldn't you wait if you're a company to upgrade your hardware when you have some of the software that is really compatible? Because we haven't seen uptake of Copilots just yet. That's what Microsoft's been telling us over the last few quarters.
So we talked about, I think collectively we thought this was an interesting stock around $19, $20. That proved to be the case. I think we thought it could get to 36 and then fail. That's where we broke down from in July of last year. Well, obviously it's through it. Now fundamentals, I think, start to matter. Quarter was fine on the EPS front, revenue, but revenue is only up 3% year over year, which is not a staggering number. And the full year guide, given what Christina just talked about, was not particularly robust. So listen, great for them. But valuation is going to start to matter in a meaningful way. For a company at $40, it's probably trading, I don't know, in terms of price to earnings. I mean, it's got to be approaching 45, 50 times.
Well, if you just annualize this quarter's number, and maybe that's fair, maybe it's not, they're going to lose money next quarter. So you're right. Sorry. Yeah.
So the part where it was sort of an option, where there's a lot of debt and not a ton of equity, that's sort of long gone. I missed that. I think you guys maybe were on that, but I was not. Now it's just, I mean, good for them. They start to, it seems like they're really making some progress in what is a difficult endeavor. So still, I just can't get on board. I'd rather, self would you rather there. I do have some Dell exposure. You're talking about Dell. You would think that this should be good for Dell. It's only up a little bit. So I kind of feel like this one, I've just missed the boat here. And I could guarantee you that if I bought it tomorrow,
it'd go down.
It would go down.
Well, Wedbush had a note out yesterday saying that the valuation is unsustainably high and said the EV to sales ratio right now, you haven't seen this since late 2023. And back then in 2023, their revenues, their gross margins, that's already the estimate for 2027 and 2028. So you're really trading on what people are forecasting for years out at this point, and that's what it's trading at right now.
Where was the foundry on that?
Yeah, I don't know. I don't think that foundry was the drag that it is today.
And what's interesting about an EV to sales is what's truly debt that they're taking on, what's truly strategic investment, what's truly equity, what's truly subsidy. Because at one point that government money was not debt, and it wasn't equity. And now it's equity and good for the government for making some money here. But that's what's fascinating because, again, we know Intel has a lot of debt. We know they've been burned through a lot of cash. But when I hear about SoftBank and I hear about NVIDIA, I'm not necessarily hearing about debt. I'm hearing about investment.
Yeah, Nathan was just pointing to his computer. He had a chart up, and what he's looking at is the downtrend that's been in place now since December, the spring
of the reason why Dan's not telling us about this chart?
I know, Dan is sitting right here.
Because he pointed it, because he did this thing, which means he didn't want to say anything.
You got to bring him out of his shell, Missy.
Get him out of his shell.
He's in my head. No. Guy, go ahead, please.
Downtrend that's been in place now for 4 years. We have just made the third price point of that downtrend line that I think is intact.
To the penny.
To the penny.
As our friend Carter Braxton Worth
At the same time, we have been seeing a little pickup in semiconductors. Yesterday, we had a downdraft kind of a day, but today was just a little bit of catch up here. Intel could help support that story, but we also got this report from the Korea Economic Daily reporting that its two main chip makers, Samsung and SK Hynix, were going to raise the prices of DRAM as well as NAND flash by about 30% in the fourth quarter, so that there is strong demand there, and that while Citi and Morgan Stanley and big banks were expecting a pickup in pricing, that these major players are already putting that into place right now.
I think a lot of U.S. investors are underinvested in Samsung because they don't know where they can buy it now. It is in some ETFs. It's in some global ETFs. This is the largest memory chip maker in the world, and I think one of the most important tech companies in the world. So it's great to hear the demand there because that's not something we've heard, and that gets us back to the total cyclicality of this sector. The cycle looks pretty solid.
Yeah.
Look at SanDisk. SNDK pulled that one up. I mean, it's up 14% today. It's trading a new all-time high. You're seeing Western Digital, Seagate. These are obviously all in the storage space. Micron has been trading really well. So they've gotten to these other components. I think, it was pretty easy to focus on the hyperscalers and NVIDIA a few years ago, and now you have to kind of think a bit broader about who is exposed to this trade.
Yeah, Guy.
We're going to hear from Western Digital, I think, on the 30th, so it's next Thursday. I mean, the valuation is not ridiculous, but highly cyclical. Do you buy these companies when they're cheap historically? That's the wrong time to buy them.